Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, October 30th, 2019. We again find ourselves in the final hour of the trading day. I mention this each day, but I think it's worth repeating. I am primarily an end of the day trader. I look at the prices during the regular part of the day, during the open and the middle part of the day. I look at that as day traders and algorithms battling that out. I prefer to make my decisions as close as I can to the closing price of the day. During the last hour, and more specifically in the last minutes of the day, the large financial institutions, the market makers come in with size, with knowledge, and they move the prices to what, in my opinion, are the most valid prices of the day. So that's why I basically sit on my hands during the day. I don't make any trades, and I wait until the end of the day to make my buying and selling decisions. So let's take a look here. Kind of a crazy day in the market. We had the Fed announcement today. They are going to cut the rates by another 1/4%, although they did mention that this would probably be a pause in the rate cuts. So kind of a big day. It does have a large effect on the market when these things happen. And, a lot of times when you have these big announcements, you'll have a move one way and then it will go the other way. So I think a good piece of advice is when big pieces of news come out like this, give it 20-30 minutes if you trade intraday to see really which way it's going to shake out and which way it's going to go. But we were down earlier. Now the Dow is up 75 points. It's up about 0.28%. NASDAQ is up 17 points, up 2.21%, and the S&P is up about 5.9 points, 0.19%. So not huge percentage-wise moves, but it is positive that we did go from negative to positive today after that announcement. So we'll see what the end of the day brings. We're not done, and we have Apple's earnings after the bell. Of course, that will probably have large impact on the market as well. So anyway, let me just make sure everybody can hear me. Hey, Steve Burns, good to see you, sir. Steve says, hi, Greg. Nice bounce here so far. Yes, yep. I was sitting here wondering, which way is this going to go? And, you never quite know. So we have to make our buying and selling decisions based upon what the price action tells us, right, Steve? Not on what we think or we predict. And by the way, Steve, I went back and looked at the charts. Yesterday you asked me, about the confluence of the third ATR channel and the 70. I would say the majority of the time, the third ATR channel is a bit higher than the 70. Not all the time. Sometimes they're right together and sometimes they're opposite. But I would say the majority of the time you have the 70, and then up above that, maybe an ATR or so, or maybe on average, you have the third ATR channel. So, but anyway, Apple, Facebook, and Etsy after the bell. Yep. So 3 big ones. Apple certainly is going to move the market. I would imagine Facebook, Etsy probably not as much, but Etsy's really been being beat up. So interesting. Might offer a good entry after the bell or tomorrow morning if they have negative earnings. Jackson, what's going on? Good to see you, sir. Looking forward. You're awake with one eye open. Okay, that is better than both eyes closed. So looking forward to our call tonight. Steve says, the market closes our signal filter. That's exactly right. Hey, what's Larry doing? How you doing, Larry? Finished Larry Height's book. Thanks for the suggestion to read. Wasn't it a good book? Larry's talking about The Rule by Larry Height. Market Wizard. Really great book, you guys. Really great book in regards to trading or life or your love life or whatever. I mean, it's mainly about trading, but it's applicable to other areas as well. Steve says, interesting confluence of ATR channel and RSI. Yeah, when you mentioned yesterday, that, kind of your take on it was that about 90% of prices fail at the third or at the 70, and then you have 90% of prices failing at the third ATR channel, so that's a pretty good confluence all the way around if you find something that lines up with both of those, right? All right, let's see where we're at. All right, so listen, the plan for today, as usual, first of all, we're going to run the U.S. legal disclaimer. We're going to get that out of the way. After that, we're going to go through each one of my positions. We're going to talk about when I bought them, why I bought them, what approach I used to buy them, and then more importantly, how I'm going to manage them going forward, either to the upside or to the downside. After that, we are going to do a few minutes on trader psychology. I think it's important to talk about. It's a very important skill, so we're going to talk about that. And then we're going to go down through my watch list, each stock one by one. We're going to take a look at the support, resistance levels. We're going to look at the indicators. I look at indicators such as RSI and MACD and moving averages, ATR channels. I look at all those indicators as potential groups of buyers or sellers. And if you are going long in a stock and you want that stock to go up, you have a much better chance of having a profitable trade if you can have many groups of buyers coming in at the same time. And if you can get a confluence of technical signals coming in at the same time, then I think you have a better chance of having a profitable trade. So we're going to go through each stock one by one. We're going to look for a confluence of indicators. And so we're going to mark potentials as we go down. At the end of the day, we're going to go back through those potentials with a little finer tooth comb and see if there's an entry. And even if you have a good confluence of indicators lining up together, you still have to look at other things as well. You have to calculate the risk to reward. You have to look at your correlation, right? So there's a bunch of different things. Just because you have a good setup, you may have a good setup and a confluence of indicators, but you also need to factor in the risk to reward. Specifically McDonald's. When we get through McDonald's, there's a couple good signals there, but it's a little lacking on the risk to reward. So we'll talk about that more when we get there. But look for a confluence of technical indicators. Make sure you factor in the risk to reward. Make sure you factor in correlation if you already have similar type of stocks already before you take that next position. And then of course money management is always very important as well, and what your position size is. So those are things we have to look at, and those are things we have to consider. So, all right, well and then after the market closes, if anybody has any questions whatsoever, please let me know. I'm happy to answer them, happy to give you my, my humble opinion. If there's any stock symbols that you would like me to look at, please let me know. I'll take a look at those, give you my humble opinion as well. And then, if you find a stock before the market closes that you think would be helpful to the group, go ahead, put it in the chat, and maybe put a little asterisk by it or something, and I'm happy to break that down before the market closes. So, all right, well, that's the plan for today, and if you could hold tight, I'll be back in about 40 seconds. Thanks. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Steve says, it was an honor for me to write a blurb for the back cover of Larry Height's book. Yeah, isn't that wonderful to have somebody like Larry Height reach out to you and write a little review of your book? I mean, that's a huge thing, Steve. I mean, that really is an honor and a privilege, and you deserve it. You deserve it. So anyway, if you guys haven't read that, read The Rule by Larry Height. It's really great, and Steve gives a review on the back as well. So anyway, thanks for coming, Steve. Always appreciate you having you here, sir. It's always an honor, and I'm always excited, and I know everyone else is as well. So, all right, well, should we get to it? Let's get to it. Okie dokie. So I did buy IWM. This is a Russell 2000. I did buy this back on the 15th of October. Been in this for quite a while, 2 weeks. And I bought this, excuse me, with the close over the 200-day. I look at the 200-day as an important level. If we can break back above it, that's bullish in my opinion. But I did buy it here with the close just barely over the 200-day. If it would have closed underneath the 200-day, I would have gone ahead and just gotten out with the small loss. So this gives me a good risk to reward type of trade, where if I'm wrong, I'm wrong. Hopefully technically small, and if I'm right, I have the ability to have a large upside. So this is a good asymmetrical leverage type of setup, good risk to reward. In addition, we also have the MACD crossover, which is another positive indicator. So here we have two indicators. We have the MACD crossover, we have the close back over the 200 going forward. If we would have closed below, what I would have gotten out. If it continued up, like we were fortunate enough to have it do, I phase out as the market moves up. When it moves up 0.45 of an ATR, I do take a profit target. Sometimes I get one, sometimes I get two, sometimes I get three, generally one or two, but this has moved up nicely. Yesterday we did close above the third ATR channel, and today we have, looks like we may close under the third ATR channel. We did test the 5-day intraday, rejected that. Earlier we were below the previous day's low. I definitely would have taken this trade off if that were the case. I'm just going to have to see where this closes. I don't like that it went above the third ATR channel and below the third ATR channel. This is a discretionary trade, meaning that I have the discretion to, enter or exit where I want on a discretionary basis. But this has been a really nice trade so far. No profit targets today, but I'm going to have to watch this at the end of the day, see how it closes. But I'm leaning towards getting out of this today because of the rejection of the third ATR channel, and now it looks like we may close below it, but we'll see. All right, so I did buy Netflix yesterday. I bought it because we had the 520 EMA crossover, which is a good long-term back-tested approach. Does not work every single time, obviously, but if you go back in time, it does do quite well. It offers you a good risk to reward ratio. I bought it here yesterday at 281.40. And you can see it's up nicely today. It's up 3.57%. I did hit 2 profit targets today already, so I've taken those off the table, locked those in. The market can't take it away from me. We are up about 1 ATR from our entry. As soon as I take an entry, if it starts moving up more equal to or larger than 1 ATR, I generally start putting in some kind of trailing stop mechanism. So this is not a mechanical trade. I'm not going to just hold this as long as the 5 is above the 20. That was just my entry. So going forward here, if it continues to move up, I'll continue to phase out. If we get a large, gnarly reversal bar where a gap up and a huge move down, something like that, I may use that as my indicator to get out. Conversely, if we have a close below the previous day's low, that will also be a reason for me to get out. But really nice trade so far today, and glad I took off about 2 profit targets, approximately 20% of the position I have taken off. So anyway, this one started out really good, so we'll see where it goes. All right, silver. I did buy silver back here on the 24th of October. I bought it when the 5 EMA crossed over the 20 EMA. Was fortunate enough the next day to have a huge gap up where I got out of about 40% of my shares on this trade right here at the top, which is always really nice. Since then, it has moved down, but again, locking in profits up here with the phasing out, that's why I really like this, because, right now we're about 2 cents below my entry point. But because I locked in 40% up here, of course, it's still a nice profitable trade. I did almost hit one profit target here today. I actually missed it by 1 penny, unfortunately, but that's okay. We were much lower earlier after the Fed announcement, and we have rallied back from that. So this is a discretionary, or I'm sorry, this is a mechanical trade, everybody. So as long as the 5 EMA stays over the 20 EMA, I'm going to hold this trade. This is just mechanical. I like to trade both mechanically and discretionarily. Sometimes, on a discretionary trade, you'll have a nice move up. It'll move against you. You'll have to get out, and then it will continue to go up, and you won't have any other place to get in. So that is why I like to balance my trading approach with different trading approaches, some mechanical, some discretionary. So this is a mechanical trade. As long as the 5 EMA stays above the 20, I'll continue to hold it, or if it starts moving up, again, I will just continue to phase out until I'm out of shares. So that's the plan on silver. All right, SPY. So world famous SPY trade. I mention this each day, but in case we have some new viewers, I do want to go over why I do buy the SPY each day. So I do buy the SPY each day at the close. Every day at the close, sell it first thing in the morning. This is from a back test from Liz Ann Saunders at Bespoke Invest on Twitter. With this back test, they tested 2 approaches. First approach would be buy the SPY at the open each day in the morning, sell it first thing at the end of the day, right? So buy at the open, sell at the close, buy at the open, sell at the close. If you would have done this each day from 1993, you'd have actually returned a negative 13.9% for your troubles. If you did the opposite, however, which is what I do, and you buy the SPY each day at the close, sell it first thing the next morning. So buy at the close, sell the next morning, buy at the close, sell the next morning. If you did this every day since 1993, you'd have actually returned a positive 634.2%. So what this really means, everybody, is that all the gains in the US stock market since 1993 have come from people bidding it up in the after hours, bidding it up in the pre-market, and selling it into the open, which is what I do. I buy it at the close, sell it at the open. Past performance is no guarantee of future results. That is true. That goes for any trading approach. Just because something has worked in the past does not mean it's going to work in the future, but I would rather, put my capital on something that has backtested well in the future, backtested well in the past, compared to something that has not backtested. And you can see chart here, blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can see there's a huge difference. The buy in the afternoon, sell in the morning has offered a really nice edge as far as a trading approach. There are ups and downs. Of course, that happens even in the most profitable trading approaches. But the key here, the key takeaway is, you have to treat trading, everybody, like it's a long-term endeavor. People understand long-term investing, but I don't think a lot of people talk about or think about about long-term trading. You should always have a long-term perspective on your trading. Don't try to make, I have to make this much this week, or I have to make this much this month. It's not going to work. Just think about it at the long run. Think about each trade as one of the next 1,000 trades. Don't let any loss or gain, get you too excited or too down. Just look at it in the long run, and you can see this approach has worked very well. The orange line, the buy in the morning, sell in the afternoon, this is one reason, guys, why I'm not a huge fan of day trading, because the real moves, the real edges come in holding overnight. You can see there's not a lot of movement during the regular trading day, and that is why it is hard for day traders to make money. They actually would be better off holding overnight. That's where the edge is, and you can see this clearly plays out in this chart. All right, so that being said, I did buy the SPY yesterday at 303.21 and sold it this morning at the open at 303.40. So it did make 19 cents on the trade. It is higher than the open, but that's okay. I've been using this since February 26th. It has done very, very well. I think it's going to be close whether or not I made a yearly high today or not. It's going to be close. Maybe not, but very close. But anyway, profitable trade overnight. I will be buying this again today at the close of the market, and I will be selling it first thing tomorrow morning. All right, Qs. Qs is an example of another mechanical trade. I bought this when the 5 EMA crossed over the 20 EMA. It happened within the value zone, which I like, between the two green lines, the 1 ATR channel and the negative 1 ATR channel. It's a mechanical trade. I'm going to stay in this as long as the 5 stays over the 20. Or if it moves up, I'm going to phase out as it moves my way. So I did buy here at 191.11. You can see it's been a nice trade so far. On these kind of big move up days, I have taken profits, and very close. You can see right here, very close to taking another profit target on this one at 197.14. So this has been a great trade. Again, it's a mechanical trade. I'm just going to have to sit on my hands, let this thing play out either to the upside. I'm going to phase out till I'm out of shares, or the 5 crosses back below the 20. But if the 5 did cross back below the 20, I have sold such a large percentage of my shares up here that it would be very difficult to take a loss on this trade. Knock on wood, right? We don't want to be cocky, but just realistically, you know, I've taken off. Well, if we hit this profit target here, I will have taken off close to 70% of this trade up here, all at profitable levels. So anyway, I'm just going to sit on my hand, let this play out, phase out to the upside till I'm out of shares, or eventually when the 5 crosses back below the 20. So that is it, everybody. So having a nice day. Netflix was the real champion for us here. So, you know, IBM is down a little bit. I am going to consider taking this off today, depending where it closes. I just don't like that it closed underneath the 3rd ATR channel, and this has been a long trade. I've gotten out of the meat of this trade anyway, so we'll see where this ends up. Silver, really glad it had that nice reversal off the bottom. It's actually positive on the day today, which is nice. SPY, overnight trade, going to be buying this again at the end of the day. I do not like buying it up here at the 3rd ATR channel and the 70 RSI, I can tell you that. But you know, that's my plan. That is the approach, right? With the overnight SPY, is you buy it regardless of what's going on. And that is about it. That is about it. Steve says, overnight SPY trade is the make money while you sleep signal. Well, it's done pretty well, Steve. It has done pretty well. I'm really glad I started using this approach. Of course, we know it's going to have drawdowns. We know those are coming. There's nothing we can do about it. But I'm taking, you know, I take the long view here, as we should on trading, always taking the long view. All right. So let me check real quick. All right. So listen, this is the time of the day that I like to talk about trader psychology. It is the #1 skill that you can develop in trading. Yes, it's important to learn about technicals, support, resistance. Yes, it is important to do that, and you have to do that. But once you know that and master that, does not mean you're going to be a profitable trader. What's really going to affect whether or not you're going to be a profitable trader in the long run is how you manage your trades, and that circles back to how you are going to manage your emotions. Just remember, it's the most important skill, everybody. And when the market's going up, you're probably thinking, Greg, what are you talking about? This is easy. But the market does not always do this. As long-term traders know, there's ups and downs, there's brutal drawdowns, and that is where traders get into problems. When they start getting frustrated, when their emotions start getting the best of them, to the upside too, you know, starts going up, they start getting cocky, they start taking too large position sizes. But Also to the downside, it starts getting frustrating. You're losing money day after day after day after day. Hopefully you're position sizing correctly, so it's not a lot, but it still gets frustrating. And that's where people make really bad decisions. They buy too much, they average down, they do all the stuff you're not supposed to do. So, I like to go through Twitter. There's a few Twitter channels out there that have such great information about trader psychology, and one of them is Thomas Paine at Trader T Paine. If you guys have not subscribed to Thomas's channel on Twitter, I highly recommend you do. Read all his posts. They're great trading words of wisdom. He really is a master with trading psychology. He posts such good things because he knows how important it is. So Thomas says, if you are someone who watches financial TV and gets sucked into the exciting chatter about the markets making all-time high, then pin this tweet to your wall. Not everything is as it appears, no matter how badly someone tries to convince you, right? And then he's referencing a post down here from Mark Minervini, and I'll get to that in a sec. But guys, the truth is in your charts and the price. The truth is not in watching financial television and whatever they're trying to push to you, whatever they're trying to sell to you, honestly. If you go back and you were to overlay all the most bullish reports from CNBC, and you put them on a chart, they'd probably be right at the very top. If you went back and looked at all the bearish reports from CNBC, they're probably all at the very bottom. So if you're following CNBC's advice, I think a lot of time you're buying at the top and you're selling at the bottom. So, but he references Mark Minervini here, and the financial channels are all talking about new highs and all this. But and this is Mark Minervini at Mark Minervini on Twitter, in case you'd like to follow him. Of course, he's a very well-known trader and educator. But the popular indexes near new highs, right? So the Qs, the SPY, the diamonds, but underlying participation is lacking. The NASDAQ is again extended from its 200-day line, but the percentage of NASDAQ stocks above their 200-day can't even eclipse 50%. Market is not yet moving in earnest, not yet an easy dollar proposition. So what he's talking about here is that, okay, we're very close to making new highs on the NASDAQ in general, but only 50% of the stocks in the NASDAQ are actually above their 50-day moving average. See, last time we were not as high and we had more stocks above. Now we're higher than this previous high and we have fewer stocks under their 200 days. So this is a divergence. We're higher than this high, but the reading is lower. So, that just circles back to be careful what you watch on television. I actually, I do follow the news and so forth, but I don't even like to read people's markets opinion. I just don't want it to have any effect on me. And if you guys don't think it will have an effect on you, you are wrong. You might glance at a few headlines and this one guy who you don't know says, hey, such and such stock may do this. Well, maybe in a couple days you're looking at trading that and maybe it's not such a great setup, but in the back of your mind, you go, well, I saw that report. That dude said it might make new highs. Anyway, if you guys have been trading for a while, you'll understand. But me personally, I just don't like to look at the news. I mean, I look at the world news and so forth that might affect the market. But when it comes to somebody's opinion on a particular stock, I don't want to know it. I don't want that junk in the back of my head, right? I want to base it on price. But it will affect you. So be careful about, how much weight you put into what you read on financial television. So thank you, Thomas Paine. Appreciate that as always, my friend. You always have such great stuff. And thank you, Mark Minervini, for that analysis here. It's good to know. Steve says VIX is making a new low here. Yes, that's good. That's confirming the new highs. Hey, what's Larry doing? Greg, does your trailing stop percentage change with the size of your position? No, it doesn't. Larry, as I phase out to the upside, I do get out of positions. The closer I get to my ultimate profit target, the larger of percentage I take out. but the trailing stop does not change. Generally the trailing stop, once I start moving one, at least one ATR away from my entry, is basically, a close below the previous day's low or some kind of rejection of a moving average or an RSI above me. But no, trailing stop percent does not change with the position. Steve says markets and turmoil special on CABC are a great dip buying signals historically. Yeah, whenever they come out, so things are horrible, that's generally a good dip. Anthony, what's going on, my brother? Hey Greg, FYI, I'm always watching in case you were wondering. Just busy, doing well. Hey Jesse, good luck to all. Hey Anthony, great to have you here, and keep in touch. Let me know what's going on with your trading. Steve says I turned off CNBC in 2012 and just use the app now. Smart. Max B, hey, what's going on? I've been tracking sentiment creation from TOS Newsfeed and investing.com, and it's 80% precisely opposite of what the market does. Thanks for that, Max. Yeah, I mean, that's exactly, this is just my opinion, but in my opinion, CNBC, all the financial news, they are literally trying to sell individual retail traders stocks at the highest price based upon how they report, and they're trying to get them to sell at the lowest price, right? So the weak hands buying, selling, buying from the strong hands, and the strong hands buying from the weak hands on the way down. Jackson says, good post reference, Greg. Thank you, sir. Appreciate it. Max B, it's designed this way, in my humble opinion. Me too. 100%. Okay. What are we doing? I tell you what, it's cold here in Utah. It's like below 30 degrees. I told you guys it snowed yesterday. I went on a hike in the snow. Man, it was cold. My face hasn't been that cold in a long time. It just went from like nice weather to cold weather like overnight. Like tomorrow's Halloween, man, those little kids are going to be freezing when they go out. And I told you guys, I was kind of thinking it would be cool if I'd see some wildlife on my hike. Well, I didn't see it on my hike, but last night late, I went outside to let Katie out, and she looked up. All of a sudden, there's this big fox like 10 feet away from us, and all three of us just froze. Katie was looking at the fox. The fox didn't dare move, was looking at Katie and me. It was a pretty cool experience, actually. And then he just trotted off, so that was good. Okie dokie smoky. So the Dow's up over 100 points. Wow. We did hit our Qs. We did hit our profit target on Qs. Nice. So we took off another percent of the Qs right here at 197.14. I must have had my sound off on there, so otherwise it would have dinged and told me. But yep, did hit that one right there. That's nice. Again, as it moves closer to my profit target, the larger amount of shares. Like down here, each profit target was maybe 8, 9, 10%. Probably in here was like 10 or 12, 15. Up here, 18 to 20. So I did take probably 20% of what I have remaining off here today. So fantastic. So IWM, my inclination is to take that off today. Netflix doing very well. Be great to hit a third profit target. You guys that phase out, you know how hard it is to hit 3 profit targets, but that's by design, kind of. It's hard. Sometimes you miss one profit target, just like I did on silver. I mean, just missed it by one stinking penny, but it shows you that my analysis was probably fairly good, in that that's where it might run into resistance. Okay, SPY, of course we had that. Going to be buying that at the end of the day. And Qs hit that other profit target. So sweet. I don't know if Bing He is here today, but he shorted here on this V1 to the downside, this bearish bar. Then yesterday he said it rallied against him. Didn't close halfway, but today he's having a nice day on that short, so congratulations, Bing He. And then what was, okay, yeah, this was Mount Doji's trade yesterday, this nice engulfing V1, engulfing bar, bullish engulfing bar, nice V1. I did like that trade. Earlier it was down, but now it's up, so that's good. So glad to have these charts up and working. My gosh, it makes this podcast about 30% easier. Guys, it was so hard having those different screens and the different charts and different readings. Oh my gosh. Hey Frank, how you doing? Frank says, I understand November, December, and January are good months for the market. Yeah, historically they are. You know, historically it's a bullish time of the year. Although last year, if you remember, December I think was the worst December on record. I think Christmas Eve was down 700 points or something like that. I think it was one of the worst drops on record. But yes, historically. But Frank, just because they are, don't let that cloud your judgment, right? Don't go, well, this is a good time of the year. Maybe I'm going to take a few more trades than I normally do. Just take the trades that you're supposed to, regardless of the time of year. Because if you would have had that thinking back in December, you would have got crushed last December. So we don't know if it's going to be, yes, on average it is, but you know, let's just make sure that we take good trades when we're supposed to, regardless of the time of the year. Hope that helps, Frank. But yes, you are correct. All right, here we go. Apple. So Apple has earnings after the bell. It might be epic. I don't know. It might be a dud. I have no idea. But, you know, yesterday we did have a big down bar on a lot of volume. So, you know, I think a lot of people missed this move, myself included, but I really didn't have any signals. I know a lot of people probably would like to buy Apple on a dip. But who knows? We might gap up and go up to 250 today or higher. You know, seems like the market was anticipating pretty good earnings. So I'm just not going to get involved. It's definitely not going to gamble on Apple one way or the other. If it gaps up and just goes, then great. Good for Apple holders. I can't do anything. But if we get a gap down, you know, that might be interesting as far as potential entry. But not till after earnings am I going to get involved in any way, shape, or form of Apple. But if you guys have Apple and you're holding through earnings, I really hope it goes up for you. Adobe. Well. Big, strong day above the 200. 5579 RSI. I don't like that it's this far out of the channel, out of the 1 ATR channel. You know, a lot of momentum there. Not such great volume as of yet. MACD is positive. If we look on the weekly, we have the 20 week moving average above us. We're still in the range of this 2 weeks bars ago. Yeah, I think I'm just going to let that one go. I don't like this V bottom. I would much rather, you know, the people that bought down here, they are going to be looking to sell if we have some kind of, you know, stall in the price. That may make it go back under the 200. I would rather buy a higher low break back above the 200 than just a V break above the 200. So I'm going to let that one go. We'll see what happens. Advanced Micro Devices did have earnings, went down on earnings a little bit, much lower earlier. Looks like it's forming a V1, but this V1 is right up here at the third ATR channel and high 60s, so nothing there. Amazon. Boy, I was really looking to buy Amazon down here when it was, you know, close to being in the very low 30s with double bottom with the divergence. But at the end of the day, it was just too high. It's moved up since then, but nothing on Amazon. What I'm waiting on Amazon, you know, a good back-tested approach on Amazon is the 550 SMA crossover. It's not yet crossed, so going forward, if we do get a 550 crossover, if it's not too high above the 1 ATR channel, I may consider it, but nothing on Amazon today. Boeing, we did have a big up bar yesterday. It looks like we held halfway of the bar here, but nothing on Boeing. Caterpillar, kind of an inside day here, up at the fourth ATR channel, way too high for me to buy up here. I need some kind of pullback. The Dow, of course, we are up now. It's 1 3/4 ATR. Really nothing for me to buy here. I needed to come back into the value zone, move sideways, look for a V1, V2. Walt Disney, I am really looking to buy Walt Disney down here. Some kind of bounce off the 200 or a close under the 200 and back over, and or down here at the confluence of the 250-day moving average, third ATR channel, and closer to the 30 RSI. You know, most prices stay, 90% of prices stay above the negative third ATR channel, and they stay below the positive third ATR channel. So if we could get, you know, as prices coming down to here, as long as you have a signal, I do like to buy there because 90% of the time it's going to hold there. But nothing on Walt Disney. And then of course we have earnings coming up, so that might interfere with taking an entry, but it's not quite low enough for me yet. Etsy has earnings after the bell. Another down day today, unfortunately for Etsy. Just have to wait and see what happens with Etsy. This is the 30 RSI for tomorrow, 48.20. So it lines up nicely with this previous support down here, this previous low. So, you know, if we get some kind of signal down here tomorrow, if they miss earnings, I might be interested in scooping up some shares there. I actually did buy Etsy here. We went above into the value zone, sideways for a couple days. Bought here, one profit target, and then I got out here when it closed halfway below my washout bar, thankfully, because it was down about 5% yesterday and down another 2.5% here. So this is one of those ones where I took a very small loss on the trade, but you know, reinforced to get out where I'm supposed to. That would have been a horrible having to hold through that. Ford, still staying under the 200-day. Really nothing there on Ford. Facebook down a little bit today. Of course, we have earnings today on Facebook, so I don't want to touch Facebook in any way, shape, or form till after earnings. You know, if they miss earnings, be interested to see if it bounces off the 200 or maybe down here the 250 and the third ATR channel. But I don't know. I have no clue what Facebook's going to do, and really no one else does either. Five Below. Well, you know, we came into the value zone, we rallied, we made a lower low. If you make a lower high, if you make a lower high, then you have to wash out the previous low, which it did today. Did bounce off, did reject the 200-day moving average also. You know, if it closed above yesterday's close, I might consider it. This one's a little bit larger than 1 ATR, so no, I think I'm going to let that one go as well. Gold, miners, moving sidewards here, really in the value zone, really nothing here though specifically. Gold, you know, we bought this crossover here when the 5 crossed over the 20, and then yesterday I had to get out when the 5 crossed back below the 20, so had to take a loss on that one. What are we at? We're at 140.76 for the 5, and the 20 is 140.85. So, you know, I will be taking this again. I will be taking the 5 crossing over the 20 if it happens again. I don't think it's going to happen today. Of course, you never know. But, you know, just because the previous trade was not a winner for you, don't let that affect it going forward. If you're confident with your trading approach, and I am with the 520 EMA, I may get 2, 3, 4 losses in a row before I hit, you know, a nice big trend potentially. So even though I did take a loss on that previous crossover, if we do get another crossover, the 5 EMA over the 20 EMA, I will go ahead and buy that. So I guess I better check Google and watch that. Gold, excuse me. Google, we had this previous high. We did break out to a new high. Yesterday, we closed back into the old range, making this a false breakout. Looks like we're still under the previous high here, so it's still a false breakout to the upside. It's a 58 RSI V1 today, but it's over the 1 ATR channel, so really nothing on Google for me. Goldman Sachs down today. Steve, nice entry here at the nice exit here at the 3rd ATR channel, locking in that profit. Nothing here. I need to pull back into value. IBB 3 days ago did break above the 200, which is good. It's a good signal, but you know, I have to look at where it is in relationship to the ATR channels, and this is above the 3rd ATR channel, and so it's just too high for me to buy. You know, the next move on IBB would be a close back into the value zone, right? And then a sidewards movement and a V1, V2, or conversely, the 5 EMA crossing back under the 20 EMA and then back over again. Intel had good earnings, been creating this higher range up here, but it's just too high for me to buy. IWM, of course, we had. This has been a really nice trade from back here, up, 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 up. I think I'm going to sell this today, everybody. I'm going to sell this because of the close, yesterday's close above the 3rd. Now we're under the 3rd. And also, if we close below the open today, even though we've rallied back pretty nicely, that's also a little bit of a bearish indicator as well. So most likely I am going to be just getting rid of IWM here, locking in the profits. This has been a really good trade. Just clear up my charts a little bit and look for something new. Johnson & Johnson did gap up today nicely, but look where it got rejected at, right? Got rejected right here at the 200-day moving average. So nothing for me on Johnson & Johnson. Coca-Cola, big bullish engulfing bar, decent V1. I guess that washes that out by a quarter, maybe not quite. It's a 59.52 RSI. It looks like we got above 50 earlier in the day and got rejected. So if I had bought yesterday for whatever reason and it closed right here, I would get out because it rejected the 50-day. Remember, if you go from under the 30, that 30 RSI, that 50 RSI above you is resistance. Just like if you bought above the 50 and you reject the 70 is resistance above you. It's the same if you go from 30 to 50 and reject the 50 as if you buy at the 50 and get rejected at the 70. So if I had bought this, I would be getting out today if it closed under the 50, and right now it is. So nothing there. You know, it's a little interesting. Yeah, that's not a fractal. Okay, this is higher here. I mean, we are breaking out of this small range over here. Like here was the high, here was the high. It looks like we're breaking out. We're still at a 49.53 RSI, so it hasn't been strong enough to break above the 50. Again, I mean, it's a good example of showing going under, getting up to the 50, and then getting rejected at the 50. So nothing on Lockheed Martin as it is right here. We do have a 520 crossover. How are we doing on time? I don't like that we have this resistance up here. I don't think it gives a very good risk to reward ratio. If you factor in the highs up here, and then if you had the 5 cross back below the 20, I don't think it would give 2 to 1. So I'm just gonna let it go. I'm just gonna let this one go. McDonald's. All right, this is a tough one. This is a very, very, very tough one. Yesterday we were under the 30 RSI and under the 250. Today we go above the 30 RSI and we also go above the 250-day moving average. So these are two really good indicators. Under 30, over 30. Under the 250, over the 250. And it looks like it's poking its head into the 3rd ATR channel. The issue is If I use this line here is the 30 RSI, if I use the 30 as my stop going forward, I'm risking this much. To the upside, if I use the 50 RSI as my initial, resistance, I'd be risking this much. 233 up to 4, not quite 2 to 1, but decent. But the problem is, I really would not be keying off of this 50. I would be keying off of the 200. And so from here to here would be our loss. From here to here is our potential reward, which concerns me. Now, if I didn't use the 30 RSI and I used to close back below the 250, okay, I'd be risking this much. Still is not the same. It still is more than if I were to get to the 200-day moving average. If I use the 250 as my stop and the 50 RSI, then yes, it does make sense. So this is a tough one. Let's circle back to that one. MO, nothing there. Merck, strong after earnings, but nothing. Microsoft is positive on the day now. Netflix, been a really nice trade for us, almost 4% at this point, 2 profit targets. Nike did bounce right off of that 50 RSI, 50-day moving average, and also off of the previous support here, was previous resistance, now became support. But we had that big bar yesterday. I just don't want to get involved with that. Philip Morris, too high. PayPal, looks like it's going to close over the 200, but it's too high. Q's hit that profit target. Silver actually positive now, which is really great. SPY going to be buying that at the end of the day. Bonds, big day up today. 45.19 RSI, just not enough for me to buy. Can't buy it there. Tesla down a bit today. That's not surprising. Twitter just moving sideways. It's actually up 8 cents, but it is building a base, but it's very, very oversold. United Healthcare, strong again, too high for me. Oil, really nothing on oil today. VIX down 45 cents, down 2%. We're to 32.12 RSI. I'm starting to be interested in VIX, but there's really no signal yet on VIX, but we'll see what comes in the future. Verizon up nice today, but nothing there. Walmart did rally. I did have to get out of this. That was a stinker yesterday. Bought here on this V2 and then boom, right against me and right back up today, but that's how it goes and that's fine. Energy down. Financials right at the third ATR channel, finding some resistance up there. Surprise. Real estate, well, it's a nice V1. We did come into the value zone, but we went down. We only had 1 day of moving sideways where it didn't go down. This is a V1. Looks like we are closing above the 50, but we only had 1 day down. I'd like to have, 2 days of moving sideways. We went down, 1 day of moving sideways, and immediately right back up. So I'm going to let that one go too. Utilities, good, but, rallying back into this huge down move. And healthcare. Guys, hold on one sec. Katie is requesting me. Give me about 15 seconds. Okay. Man, it's cold out there. Holy smokes, is it cold. So gold, getting close to a crossover. I don't quite see it yet, though. This is a tough one. I just don't think it gives a very good risk to reward, no matter how you slice this up. Nice volume. But again, if I use the 30 RSI as my initial stop, it's way down here. Very likely it will get rejected at the 200. Even if I use the 250 as my stop, most likely going to get rejected at the 200. Although I don't know that for sure. I think I'm going to wait, see if we get a close back above the 200. I think that's what I'm going to do. Or if we pull back and can get that RSI down lower, maybe 33, something like that, then the risk to reward will make sense. But yeah, this is a very tough one. I mean, this is a complicated one depending on where you think your profit and losses are. But I really do think that we're going to find some resistance at the 200, and with that, none of these risk to rewards make sense. So this is a good example, guys, of having two really good indicators: under 30, back over 30, under the 250, back over the 30, but taking into account the risk to reward moving forward. So I'm just going to let it go. I'm just going to let it go. So honestly, it doesn't look like I'm going to be buying anything today, which again, guys, is totally fine. It's totally fine. It shows maturity in your trading when if there's nothing to buy, you don't buy it, right? So let's look at the current position, see if there's anything. I'm going to get rid of IWM. It looks like the close is below the open. We did reject the third ATR channel. So I'm going to go ahead and I'm going to get rid of right. Sorry, I'm thinking here. Oh yeah, this was on MasterCard. See, the 1050 EMA crossover is a good back-tested approach, but you can see the 10 is at 272.55 and the 50 is at 272.60. So that's not close either. That's not going to cross either. Yeah, I'm just gonna roll with it, guys, and not take any positions today. Oh, except for of course the overnight SPY trade. So all right, so IBM is gone. Thank you very much. That was a really great trade. Netflix, really nice, 3.64. Silver had a nice reversal back up, so I will be keeping that. SPY I'm going to buy at the end of the day. And Qs, we hit that profit target there today, which is nice. So it looks like McDonald's going strong into the close. So anyway, any of you guys that bought McDonald's earlier had a great day today, but as far as entering a new position here right now, this second, I can't do it. Okay. So I did buy SPY at 304.14. All right, so that is our new entry for tomorrow. 304.14. Ooh, that's high. I do not like buying it there at that third ATR channel, but that's how it goes. All right, so IWM, really great trade. Glad to be out of that. Lock that in. Get rid of that. And Netflix, nice 2 profit targeter today. Silver, just missed that profit target by 1 penny. SPY, I entered the new SPY at 304.14. And the Qs, this is mechanicals, and did hit a 1 profit target there today. So that's that. So nice profitable day today. Appreciate that, and always grateful for that. And so listen, real quick before we get into questions and answers, I just want to put in my daily plug. Hope that's okay, but I do want to let everybody know that I do offer private one-on-one coaching, mentoring, and teaching lessons in the evening time via Skype. I've had really good success with my clients. I have a 10-hour course. It's 5 2-hour live Skype sessions with me one-on-one. I teach you everything I've learned over the last 24 years from all my mentor and coaches. And I think it's a good investment. I think you will really enjoy it. I think you'll have a much deeper understanding of trading when you get through with it. You know, during the first part of the lesson, you know, I teach, and then the second part, we go through, we analyze charts, and then I have you teach it back to me. That way I really know that you know it and are comfortable with it before we move on to the next lesson. You know, if you're interested, please reach out to me. You can send me an email. The email is in the description of this video, or you can send me a message on Skype. But I do like to have a little bit of an interview call before, you know, just to see whether or not you're a good fit for me or I'm a good fit for you. We both kind of interview each other a little bit, but it's free call. You don't have to take the lessons. It's just kind of kicking the tires to see whether or not we're, you know, a fit for each other. But I do like to know a little bit more about you. I like to know about how you got into trading, how you've been trading, what your challenges are, and what your goals are. And then, you know, I will teach you everything I know. And, you know, the end game is for me to help you achieve those goals. So, and I have been able to do that for people. So, again, if you're interested, please reach out to me. Let me know. Email is in the description, and then you can also reach out to me on Skype. Not Skype, Twitter. I always get those confused. And then, you know, if you have not subscribed to this channel, I would appreciate it if you would hit the subscribe button. And at the very least, you know, if you like today's content, if you're learning something from this channel, if you find it of value, you know, please do me a favor, hit the thumbs up button. It helps YouTube promote the channel out to more people. And there are a lot of people, folks, that need help with trading and need to learn some good trading principles, and you know, if they come to this channel, I think it really will help them. So, you know, help me help them by hitting the thumbs up button. I really would appreciate it. So, all right, well, there is my plug, and let's see real quick. Let me take a look here. Sorry. All right. Okay, here we go. All right. Jackson says, due for a few days down on Adobe. Well, maybe. Thing is, we don't know, right? Be careful about saying do, Jackson, because you really never quite know. Things can go down a lot further than you think. They can go up a lot further than you think as well. So try not to use that word do, because it might affect your trading plan, right? So anyway, just good advice, because I used to say that a lot, and it was not good. It was not good. But Adobe did, you know, close strongly above the 1 ATR channel. It closed strongly above the 200-day moving average. It is above the 50 RSI. So yeah, I mean, looks pretty good actually. I didn't want to take it I didn't want to take it that high in the Okay, sorry. I didn't want to take it that high over the 1 ATR channel. So that's why, and this other previous resistance up here. So anyway, let's see. John says, I saved a lot last year going flat in December. Oh man, Johnny, imagine. I had a bad December. I had a bad December last year. Rallied strongly at the very end, but yeah, I mean, that makes the whole year going flat in December. Congratulations. Frank says, Greg, still watching MCD and or stepping into Nike. All right. Yeah, so Nike we talked about. I mean, we did bounce off of the 50-day moving average. Actually, we closed under it, closed back above, and we also did have the support, this previous resistance. We broke above it, came back down. So we found support at the 50. We found support at this previous resistance here, which is a good thing. With this big down day yesterday, I don't really like getting in front of too big of large down days, and it's still under the 50 RSI. Me personally, I'd like to see this move into the value zone, sell off a day or two, have a higher low V1 or V2. And then what was the other one? Oh, McDonald's. Yeah, McDonald's, that's a tough one, but you understand why I didn't take it, because, you know, I'm looking at this 200 as a major area of resistance. And so even, and I'm not saying it's not going to get there, but if it does get there, it's not a lot to the upside compared to a lot to the downside. So I'm going to wait and see how it reacts around the 200. If it goes down further, I might scoop it up there because it would give me a better risk to reward ratio. If it closes above the 200, I might pick it up there because then I have a small risk underneath me with the 200 closely below. Frank, this channel may have the highest IQ out there. Yeah, it's been a good channel so far. I mean, we've had really great people, we've had really good input, which is nice. We haven't had a lot of trolling and all that kind of stuff, which is great. Jesse, what's going on, sir? Jesse says, hey, Greg and all. What up, Anthony? Good to see you, Jesse. Hope you're doing well. Any positions you have, Jess? Like to keep in touch with Jesse. Jesse's a former student of mine. We just got done with our lessons. So, I always like to keep in touch with my former students, see what's going on with their trading, what their trades are. Bing He, hey, how you doing, Bing He? Hey, I talked about your trade. So it looks like you had a good trade on EOG. You shorted it when we had this bearish engulfing bar to the downside, V1 to the downside. Yesterday it did go up against you, but it didn't close above halfway. And today down 3%. So it looks like you've done pretty well, Bing He, if you still have it. Hey, Marco, how you doing, sir? Nice to see you. Hope everything is well there in Europe, in Slovenia. And if there's anything I can help you with, if you have any questions, Marco, you please let me know, okay? Larry says, thanks for your honesty. Not buying is hard, but today wasn't our day. Well, we got to be honest, right? I mean, if you don't have honesty in trading, you get yourself in a bad situation. Hey, Kurt, what's going on? Good to see you, sir. Hope you're doing well. Kurt is also a former student of mine. Thank you so much for coming by. Hope everything is going well. Jackson says, looking for a few days on Adobe. That's much better. That's much better, bud. Much better. Jackson says, Greg, because of December's 2018 tough period, did you find it difficult to get into the market again when it started to rally, i.e. have hesitation to take trades because of recent past? Yeah, of course. It's always tough. It's always tough if you get beat up to get back in. And that's one of the reasons why it's so important to position size correctly so that for a variety of reasons. But if the market goes down against you and you take a big hit, you're even more likely not to take the next trade. And that's not a good thing either, right? Because that next trade may be a big up move. So, actually last year in December, I went a little heavy on a couple stocks, which, lesson learned. At the 200-day moving average, but the 200 did not hold very well last year. And honestly, it was too large a position size. That's why you've really heard me harping on position size. So this year's been good. This year, I have really stuck 100% to the plan, and it feels much, much better. But yeah, I mean, in addition, to position sizing, be too large of position size being a bad thing, if you get beat up, with the large position size, you're going to be much more hesitant to get into that next trade, and you have to get into that next trade if it's a correct trade. But if you've been beat up and you're destabilized and you've just exhausted and you feel down about it, you're not going to want to get in, and a lot of times those are the ones that go up. Bing He said, took the trade for STNG. Okay, so I mean, I can see what you're doing here. Did come into the value zone, did move sideways here, but then we went down. Yeah, I mean, it's okay. It's good. I mean, it did reject the washout bar did reject the 1 ATR channel. Wait, did you buy this in front of earnings? I don't know if earnings was this morning or not. I hope that goes your way if earnings haven't come out. Bing He said, yes, EOG going good for me. Have not hit profit target. Yeah, that's going really nice. Murat, hey buddy, what's going on? Murat says Zynga. Oh, I haven't looked at. Okay, very nice. Did they come out with earnings today? Is it after or was it this morning, Murat? Oh, maybe Zynga was after today. Yes, perfect. Way to go, bud. Way to go. Jesse said, the rule was excellent. Haidt is a hilarious author. Yeah, he's pretty funny, right? Remember, he was a bit of a comedian when he was younger, but excellent book. I'm so glad to hear everybody reading that book. Hey, Wayne, what's going on? Wayne K says, McDonald's took it this morning at 193 on a breakout. Took it, oh, okay, so you took it this morning at 193. Yes, nice. Look at that, 196.89. Congratulations, Wayne. Yep, we've been watching this one, haven't we? But dang, this was a tough one for me here not to be able to take this today. But I'm glad you got it lower. I'm glad you got it intraday. Congratulations. What's your plan on this, Wayne? What's your plan on this now that you bought it at 193? What's your plan going forward? So you bought it right here. Bing He said Sting earnings is the 7th of November. Oh, is it? See on my chart here, it says 10:30. Interesting. Jackson says, Haidt is a legend. Literally got through audible book from start to finish since our lesson. Good, I'm glad. Profit at 197. Where's your stop, Wayne? Yeah, that makes sense. The -2 ATR channel and the 200-day, that does make sense for a profit. See what I mean? That's kind of why people that bought it down here are kind of going to be looking to sell here. That's why I didn't want to buy here. I hope that makes sense. Bing He said Zach website shows 7th of November. Okay. Yeah, I don't know why. I don't know why this one shows the earnings, but anyway, you know, it's always good to get a couple different not opinions, but confirmations on earnings, because sometimes these are off. Most of the time they're correct. So it looks like Facebook is up, somebody said. Whoa, it's up 3.5%. Fantastic. Apple, has Apple come out yet? Okay. Stop is 183. 183? Or is that 193? Oh, okay. Whew. Okay, glad to hear that, Wayne. Like, that risk reward's not so good anymore. Perfect. Perfect, perfect. Congratulations, Wayne. Great trade. But you know, on McDonald's, it went down, 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 down. If you're just buying it and when it goes down, you're just trying to catch a falling knife. At least yesterday it found some support. You know what I mean? Which was good. So Apple's up $1.50 in after hours, but I don't think that's earnings yet. That's probably anticipation of earnings, but who knows? Frank says, Greg, have you noticed any change in volume since free commissions started? You know, Frank, I don't know if I've really noticed any difference. I have noticed a difference in my account. I have noticed how, they're kind of hidden when they come out, but, I mean, I'm saving a few $100s, if not more, a month. And so I am noticing a difference in my balance. It was Wayne or JT that was saying that they thought that they were maybe saving about $500 a month. Have you guys noticed a difference in your accounts? I mean, with the commissions being free, I mean, have you noticed that your accounts seem larger? Have you guys been noticing that? Jackson says, I've heard you mention that you will get out of a position because of a Fed announcement tomorrow, etc., and others. So how do you gauge whether you'll hold something through the news and when you won't? Oh, that's a good question. Okay, so actually, I mean, obviously earnings, I'm going to get out. I think today, the anticipation that the Fed was going to cut rates was pretty high, over 90%. So I didn't think it was going to be a big surprise. I think the best way to answer that, if something's coming out that the market's really not sure about, kind of 50-50 about, I think that is probably when I might take half of the position off or just get out of something. Not a great answer, but I'm not. There's nothing in the recent past that I can think about. Maybe like a very uncertain trade deal or a very uncertain interest rate or something like that. But in this particular case, I think it was pretty well baked into the cake that there was going to be a cut, and so there really wasn't that much move after. But that's just me. It's just kind of on a case by case basis, Jackson. Jesse said, I took XLRE today, cracked 50 just before the close. Would have liked one more day sideways, but liked other entry signals. Yeah, I mean, we talked about this only one day sidewards, but we did have a beautiful V1. There's no doubt about that. We had a bullish engulfing candle, no doubt about that, and we did close above the 50 RSI, which is also positive. So, what I like about this also, Jesse, is, if we go halfway of the washout bar, it also lines up pretty close to the 50-day moving average. So pretty strong. We have a 50% retracement for Fibonacci here at halfway, and we also have the 50. So, if it were me, I'd probably, I mean, if I took this trade today, if I had a close below halfway of this bar, that would be my stop. on a closing basis, not intraday. So that's your only position. Okay. So I feel pretty light, pretty light. Netflix, of course, was great, but only took half a position of this, if you guys remember, because it's under the 200-day, but still very happy with it for sure. So going forward, you know, close under the previous day's low. Now that it's moved 1 ATR away from my entry, I'll be trailing this. Silver, fantastic. Really glad that it reversed off of that low, but this one's mechanical, so this one's very easy going forward. SPY bought that at the end of the day, and the Qs has been fantastic trade so far. No doubt about it. Really glad to get profit targets up here this high because it's larger percentage of my shares and at these higher levels. So VIX, I'm going to be watching VIX. I'll tell you what, we're at a 31.37 RSI, so I'm going to be looking for, you know, near the 30 for some kind of potential bounce. Last trades we had on VIX were really good. They were right here. Under 30, over 30, under the third ATR channel, over the third ATR channel, V2, and we rode that baby up there for about a 14% return from top to bottom. Jackson says, apart from earnings, any other numbers, news that you personally take notice of? I know the news hype you ignore, but what numbers or announcements do you pay attention to? I think the Fed announcements are probably the ones that I would most likely pay attention to. You know, you have the unemployment numbers, things like that, but then I become too involved in trading news. So essentially, you know, a Fed announcement, you know, a decision on a Fed cuts, I may make a decision. You know, I've said this in the past, but, you know, if there is a big announcement coming up where there's, you know, like the Fed, let's just say Fed announcement, because that has probably some of the largest effect. But, you know, if somebody said, I'm going to take half off before here, I wouldn't blame them at all. You know, the last few Fed announcements, we have not had very big moves. But sometimes you do have big moves. So just, you know, getting out of half of your positions in front of it, I wouldn't fault anybody for doing that. Being he said, XLRE was also on a trade I considered, but has not enough time to analyze. May decide to take it at the open tomorrow. Yeah, I mean, looks pretty good. And then, you know, from a triple screen perspective, everybody on the monthly, up nice. Definitely uptrend. On the weekly, we're starting to get back into the value zone. I'd like to get it a little deeper into the value zone for the triple screen. And then on the daily, looking for the entry. But this, you know, this is a good entry. I mean, it's a good entry. Do we think it's going to go up? I have no idea. You know, no one knows. It's like spinning the wheel. You don't know what's going to happen. All you do know is you have to have a plan. I'm going to get out under halfway, or I mean, if I took the trade, I would get out with the close under halfway. And if it keeps moving up, be patient with it, and until it gives you a reason not to be patient. But it does offer a good risk reward. I mean, your risk is from here to here. You know, and your potential reward, even if you go to the previous highs, you know, two, 3 times that. So I think it's good. Monthly XLRE shows the 3 ATR high. Yeah, it's a little high, definitely on the ATR for sure on the monthly, but I tend to look. You know, if I'm looking at multiple time frames, I tend to look, I get concerned about things being at the third ATR channel on the weekly. I mean, I get concerned about on the daily, but on the weekly, really, I mean, you can see right here, this is where it failed. Right here, this is where it failed. But on the weekly, you know, we're at the 1 ATR channel. So I would put more credence and validity on the reading on ATR channels on the weekly and the daily than I would the monthly. All right, everybody, I'm going to get out of here. I'm going to go for a hike, get some dinner, and then Jackson and I have lessons tonight. So I'm looking forward to that. So thank you for coming. I really appreciate it. Let me just take a quick look here. Yeah, Jackson, I don't like to take it at the third ATR. I don't like to take it. I said that a couple times earlier. I don't like taking it, but that's the plan on the overnight. You know, if I start saying I'm gonna take the overnight here, but I'm not gonna take it there, then it degrades the value of the system. Being he, I remember PODD had a 3 ATR for monthly, and it took a loss. Well, yeah, sometimes. I mean, sometimes it's going to be at the 1 ATR channel on the monthly, and you'll still take a loss. But just in general, I'm concerned about third ATR channels on the weekly. I mean, third ATR channels on the monthly, I don't like either. But you know, looking at the weekly at the 1 ATR channel on XLE is to me is okay. Jesse says, got to remove emotion. It's mechanical and back tested. That's exactly right. If I start having a discretionary on the SPY, then I have no rules and I can do whatever I want, right? You know. So Jesse, thank you, sir, for coming by. Good to see you. Appreciate it as always. Frank, thank you, sir. Good to see you. Thank you for coming. Bing He, hope you have a good day in Singapore. Really nice seeing you, and good job on your short trade there. And Jackson, I will speak to you tonight. Looking forward to that. Wayne, good to see you. Congratulations on your McDonald's trade. Hope that keeps moving up for you. Murray, good to see you, sir. Hope you're doing well in Norway, and thank you so much for coming. And let's see. Wayne, I said goodbye to Wayne, and I said bye to Murray. And Kurt, good seeing you, sir. And please keep in touch, bud. I want to know how you're doing, how your trades are going. Looking forward to seeing some of your trades. Hey, what's Larry doing? Good to see you, and hope you have a good rest of the day, Larry. Marco, good to see you, my friend. Thanks for coming. Let me know if there's anything I can help you with, okay? Johnny, thank you. I will have a great hike. Johnny's got to run early, so thank you for coming, John. And Max B, good to see you back, my friend. Thanks for coming. It's always good to see you and your comments. Steve Burns, thank you, my friend. Always an honor to have you here, and hope you have a good rest of the day. Say hello to Holly and the dogs for me. Anthony, good to see you, bud. Please keep in touch. Want to know how you're doing. Want to know what's going on with your trading. And I think I got everybody. So, all right. Have a good rest of your day, everybody. Go out, do something nice, and hopefully I will see you tomorrow during the last hour of the market. So take care. Have a good day. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind, which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.